joined by Khiem Do. He is head of Asian multi-asset strategy for Baring Asset Management. Khiem, great to see you as ever.
Hello,
Hi, Joy. Right, let's...
Thank you.
Now they've got the pleasantries out of the way. First day, traders back at their desks. What are they going to be doing?
I think that the buying pressure is still on. I think that a number of investors have got back to the market, but I think that it is really at the start of a buying program.
It really is at the moment as though the year is just about to begin, because we had just a hangover, pardon the expression, of the New Year, and now we had the Chinese New Year.
Yes.
Now we can actually say, okay, let's get to business.
Yes. I think that a number of things have happened over the past few weeks. At first, I mean, in December, we had some great news from the ECB with the long-term refinancing option program. And then we had the PBOC cutting the RRR ratio. And now we have the Fed coming to give us another present, another Hong Pao, you know, which is to keep interest rates low until 2014. I mean, this is fantastic news for the market.
Yeah, I want to talk to you about Europe and the US after the
Sure.
break, but I want to just concentrate on the Chinese story right
Okay,
now and,
yeah.
and the music there. Will, you know, 8.9% growth. We were talking about this last time, and it was, I was looking at what you'd been saying in, I think it was May, and you were suggesting that growth would be between, what, 8 and 9%. You're
That's
bang
right.
on the money right now.
Right.
So that continues. To have all the downside risks disappeared now, and is the only way up?
No, I wouldn't say that all the downside risks have disappeared. I think that the first quarter number this year could be a bit lower than the last quarter of last year. But I think that it will mark the bottom of the economic cycle in China. So I do think that for the year, we're still looking at around 8-ish%. So, you know, 8 to 9% is still very much doable.
Do we get a rally with Chinese equities? Do we get a rally after
Absolutely.
the horrible time that we had on the Hang Seng here in Hong Kong in 2011?
Absolutely. I think that we'll get the big rally in the Chinese market. It was held back last year because of the policy tightening. And the PBOC, as we have seen,
But they've
have
got lots
started
of
to
gifts
ease.
to keep on giving, haven't they, in terms of monetary easing, should they want it?
Should they want to? That's absolutely. And also the valuations are very cheap. Valuations in the Chinese market are one of the cheapest in the world, you know, beyond, I mean, except Russia. Russia is a lot cheaper, but China is cheap.
Okay, then you look at domestic stocks rather than the ones which are going to have export and foreign exposure, aren't you, really?
No, I think that one looks at the sectors, whether it's domestic or global, which have been beaten down very hard last year. So, you know, like today, even the shipping companies are rising, and all the materials companies and the property developers, the banks. I mean, all the sectors which have been beaten hard last year are all rallying because they were discounting a very, very poor situation.
Everything got beaten down, didn't it, last year?
Except for the consumer stocks and the telecom stocks. Yeah. Those did well. But those are not really, you know, leading to
cyclicals rather than consumer discretionary.
Exactly, exactly.
Yeah, and of course telecoms, because they're utilities essentially now.
Exactly,
right? Okay.
exactly.
Talk a little bit about this. There's a lot for them to be talking about. I mean, what do they look at? Is it back as a, we had that comment coming through of the risk-on sentiment?
I think that definitely the risk-on sentiment has been back, and I think will stay with us for a little while. But as far as Germany is concerned, I mean, the position of Germany is still tough love. There is a bit of love there. I mean, with the ECB, you know, throwing
the Euro project goes down, they go down with it, don't they? So
yes,
they
of
have
course.
to have some love there.
Yes, absolutely. But it's tough. It's still tough. I mean, there is no money printing like Mr. Bernanke has been telling the markets last night. I mean, Mr. Bernanke is still a dove, whereas Ms. Merkel is still kind of a little hawk. Not too much of a big hawk. But I do think that, obviously...
Not a German eagle, then?
Yeah. No, not the German eagle. Absolutely not.
Right, well, okay, we have verbal, as Mike McDonald was saying, one of our Bloomberg economists, saying
Yes.
that it was in fact verbal quantitative easing before the reality.
Yes.
And now, what is the position with Angela Merkel? Because there is a refusal to allow the European Central Bank to be printing money, which is, of course, something which effectively they have been doing with the long-term refinancing option.
Yes, yes, indeed. It is indirect. As I said, it's tough love. It's still love, but it's tough love. It's indirect. It's not as... I think that they don't want to give the impression that they can print money to help out the Greeks, the Portuguese, and the Spaniards before the latter actually restructured and reformed. They want reform and restructuring to go along with the you know, the assistance. So I think that that's the situation. But definitely there is assistance. but assistance there, but they want reforms and restructuring as well, which I think that is a good thing. Otherwise, nothing will happen over the next 5 years.
Khiem, let's talk about the US now, of course. Sure. And when we heard what the Fed was saying, 2014 through 2014, that was, as you said earlier on, another gift that the Fed was giving to investors.
Yes, to me, actually, it was a surprise because we all know that among the major nations in the OECD world, the US economy is one of the most resilient and very robust relative to every other major nation. And yet, Mr. Bernanke is presenting the world with, a gift, because he didn't have to say to do this, but he actually does that. I think that that's just to make sure that the recovery in the domestic economy in the U.S. can continue and doesn't falter. Because if it falters, because let's say the European recession, then it could be a problem for the U.S. economy. So I think that he basically wants to underwrite the recovery. And, underwriting the recovery is very good for equity markets and for risk assets.
Well, let us see. Khiem, thanks so much for your time. Great to see you as ever. Khiem Do from Baring Asset Management.